This week I wanted to talk to you about a bungalow that was so ugly even its own bricks looked embarrassed. Every lender called it unmortgageable, but bridging finance made it a winner. Stick with me and I'll break down the exact numbers and reveal the 5 big mistakes to dodge. So why did the high street lenders say no? When a property has no kitchen, dodgy wiring or structural issues, regular mortgage lenders run faster than your mates when it's their round in a pub. This limited company client had their heart set on a bungalow in Southall, but it was a fixer-upper nightmare. It had a missing kitchen, ancient electrics and structural headaches. That meant no buy-to-let lender would touch it, even with a very large barge pole. And this is where bridging finance saved the day. Here's the beauty of bridging. Lenders care less about how ugly the property is today and more like what it will look like after your refurb. We secured a 12-month bridge of around £344,000 against a valuation of £492,000, which is about 70% loan to value. Interest was rolled up into the loan, so no monthly repayments, which meant our investor could put every penny into transforming the property. Bridging lenders often use a lower valuation known as the 180-day forced sale value. It's the figure they'd expect if they had to sell quickly in about 6 months if you mess things up. That lower number can mean a smaller loan, so always check your figures carefully. There are 5 rookie mistakes that can blow your refurb budgets. First, no exit plan. Bridging without a clear refinance lined up is like jumping from a plane without a parachute. Exciting, but very short-lived. Second, forgetting contingency funds. This bungalow threw a surprise damp-proof course into the mix, costing thousands extra. Always budget at least 10% extra. Third, being too optimistic about planning permission. Mid-deal, our investor secured planning permission to knock the walls down and reconfigure rooms. Great news, but it meant extending the timeline and we needed a flexible lender to re-bridge the bridge. Fourth, ignoring small print costs. Arrangement fees, legal bills, broker charges. These fees can add up very quickly. And then fifth, ignoring the cost of time. Even rolled up interest hits your profit at refinance. Every month counts, so speed is your friend. Let's crunch the numbers and get practical. A bridging loan of about £344,000 at roughly 0.9% interest per month for 10 months adds up to nearly £31,000 in interest. Add arrangement fees of around 2%, which is about £6,900, and exit fees, so that's another 1%, so roughly £3,440. That makes the total cost of the bridging finance around £41,000. That sounds heavy, right? But after refurb, this bungalow's value is estimated at £630,000. So refinancing this onto a 75% loan to value buy-to-let mortgage releases about £472,500, clearing the bridge and pulling over £80,000 back into the investor's pocket. So how do you make bridging finance work for you? You've got to plan thoroughly. Line up your bridging lender and refinance lender from day one. Budget your refurb timeline generously and then double what your builder promises. Lastly, choose lenders offering flexibility over the cheap rates. When our clients' plans changed, that flexibility was worth every penny saved in the stress and sleepless nights. If you've spotted your own fixer-upper, or if you're mid-deal and the numbers aren't stacking, don't panic. Click the link below, book a quick call and let's crunch the numbers together. I create straight-talking videos for UK landlords covering buy-to-let bridging loans and smart property finance strategies. If you're serious about growing your portfolio, YouTube's picked a video out for you here. Give that one a watch next, and thanks for watching. I'll see you next week.